Bitcoin has fallen down a fraction. Does this mean that we're actually starting to see a bigger corrective move for BTC, or is this just a momentary blip as we start to think about the next move to the upside? In this video, that's what we're going to be talking about. If I get into this and you find it useful and informative, smash the like button. I appreciate that. If you're new, subscribe, tap the bell, select all the notifications, and stay up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out. Linked in the description down below. I don't think you'll regret it. Let's jump down into the desktop though and take a look at what is going on here when it comes to BTC. So here we have Bitcoin paired up with the USDT pair on the hourly chart, and Binance is our data source. Following on from the stream that we did this morning on YouTube, we can see that we are gravitating down towards our yellow box area. This is the area that was scoped out on a 1-to-1 ratio, or more specifically 1 to 1.236 on the Fib scale, between 22,336 and 22,571. Okay, so this is the area that we're thinking is probably an area that we're going to have to revisit. And there was a lot of people going short in terms of the long and short ratios, but we did move up a fraction here, probably grab some of that liquidity. But I do think there's a likelihood that we have to come down, tap this low area down here, and then move on up. Now, if I throw the HTF liquidity in here, you can see there's a little bit of pocket of liquidity. We come down, we grab this, then we move on up. It's possible that as we do come down just a fraction further towards this white line, this has been 22,292. You can see it's just right in here. We can grab this, then we can move up and grab that green liquidity a little bit higher. Essentially, the money is in these areas, in these pockets of ranges of BTC's price, and so the price action usually moves towards it and grab hold of the liquidity. It's called liquidity hunting. Institutional players do this a lot. Whales do this a lot, and there's a pocket of smart retail investors that like to do liquidity hunting too. But you do need a lot of money to be able to move the needle and push the money in that direction. It's easier if you know where the market or where the majority of that liquidity sits, because then you can just go and target it, and usually smart money is going to drag the price down towards that liquidity. So you can kind of get around it that way as well. So as we kind of think about this is the area where we're likely to find demand. Okay, so I'm going to just write this in here. It's going to be demand. Okay, this is going to be the demand area. Now, what we look at here on our stochastic is we can see that we are oversold on the 4, 8, and daily charts, but overbought on the 60 and the weekly. I do think there's a bigger corrective move coming down, okay, across a much larger time frame. Okay, so I think we still have to go up before we can go down until our daily and weekly are aligned, and our 8-hour is aligned to our daily, ideally, and everything in between. So 12, 16, 20 hours, all of those kind of charts, they need to be high on the stochastic scale in order for us to see that momentum pushing the price to the downside. Right now, we've got some micro movements that probably take us down, and then from here, I think we're going to go up. So we reflect on this. We can see all of this overlapping structure here. This is just a test on the lower side, but we are still technically doing ourselves a disservice by going up into higher highs and higher lows, which tend to have a tendency to break down. But I don't think we're there yet until we test back up in the higher ranges between 24 and 25K. I think we have to go back up into that range, even if it is just for a moment, before we can move on down. Now, that's a longer term scale, right? We're not saying that's going to happen instantaneously. But once we hit these lows around the 22,200 and to 22,300, once we're in this range and we complete this range, I think the idea is that we move back up over the next kind of week or so into those higher ranges. Now, there's lots of noise about unemployment rates and recessions and all that kind of stuff. One of the things I would say specifically from the US, where we see, unemployment rate, is not as kind of negative as we think it would be. We have to kind of dissect that data down a little bit more, and rather than just looking at it as jobs as a whole, it's okay, is there a decrease in full-time employment versus an increase of part-time employment? Okay, are the numbers being boosted in certain areas, as in less full-time jobs but more part-time jobs, right? I think there's a ways to kind of cut that data and make it look better than it actually is, because all I see across the board is mass unemployment, mass redundancies, and real bad economic climate. But yet we don't see that from the US. We're seeing something vastly different to that. So I think the numbers are not necessarily doing us justice for understanding why we see the movement in the market the way that we do. Okay, and so let's not trick ourselves into thinking that something else is going on here, or something more fantastic is occurring, when our data still reflects the same. Okay, if I bring this up, we can see that we still have a decrease with smart money, right? Smart money is leaving Bitcoin. It isn't coming in, and all you have is dumb money coming in, buying up the Bitcoin. So we want to bear in mind that we haven't got the big players coming in here. All they're doing is coming out. Okay, so until big money, smart money comes in, I don't think Bitcoin's got this big bull run ahead of it. If anything, we'll just trade sideways and range or just go down into slight lower lows. Nothing major, though. So we'll kind of keep that in mind, okay? So understanding that there are some interesting things being spoken about, but doesn't really change the underlying data. It remains the same. You do as they do, not as they say. And what they're doing, and big money and smart money, is not buying Bitcoin, it's selling Bitcoin. So you do as they do, not as they say. So following on and moving on, we can jump up into our 4-hour chart, and we can see here, again, we're just kind of, hovering around these key areas of support, but we are very much in higher highs and higher lows here. Although technically we broke this one. So if I were to draw a trend line in here, you can see that we briefly broke below it, and then we rested on it, and then we moved back up again. Again, I do think we're going to be pushing up into these higher ranges. I said before quite early on that this looks like it could be some kind of diagonal. That's still very much the same pattern here and same kind of thought pattern, but I don't think it's really a good way of kind of looking at it at the moment. I don't think a diagonal is doing it justice. If anything, maybe it is an expanding diagonal at best, like a megaphone pattern. We can adjust it out a little bit just to kind of make it fit. But again, one of these things that we have to understand is these have a tendency to break down. Even if we do end up testing the 24.5k ranges, I still think we have to come down. Now, we're oversold on the 4 hours, so there is progression upwards. The same with the 8-hour chart. You can see that we're finding support on the 50 EMA here, and we can move on up again from the low stochastics. The 12 is the same, the 16 is the same, and the 20 is the same, along with our daily. Okay, so everything is looking okay for progression upwards here. So again, we're not too concerned with short-term movements to the downside. I still think there is progression upwards to be had. One of the things we are concerned about, though, is, of course, the larger time frame. So if I come over here and we take a look at our weekly, okay, our weekly is very much a concern because although we can stay up and hover around these areas for a few weeks, at some point this is going to reverse on us and it's going to catch a lot of people out. We're finding resistance on the 200 EMA at the moment. We can see that previously over here in August of 2022, and we can see a very similar story right up here as we are in February of 2023. You can also see that we have this cross looming on our 250 EMAs. You can see those in there, and there's resistance right up here at 24.3 and 25.2 on our supply area. This is where sellers are likely to be, and that also happens to fall in line with our 50 EMA. So there's a lot of resistance up here. Now we take that resistance, we take our stochastic, it's also in the overbought area. We are going to start thinking that things are not looking overly great. Now we turn the stochastic off and throw in our volume profiles. Our volume profiles also show us the same thing. Volumes are decreasing. They've been decreasing here week on week for the last month or so, specifically as we've been heading up to the upside. Now I said this before and I'll say it again. The main driver behind the price movement of Bitcoin and cryptocurrency to the upside has been driven from the Forex traders dumping USD in favor of other currencies. And what that tends to do is it creates a surplus of supply of US dollars, which basically devalues the DXY. The dollar index drops down because people are dumping their USD in favor of, Great British Pound or Euro or Japanese Yen and so forth, right? So what you end up finding is the dollar index goes down. When the dollar index goes down, it means that you need more dollars to buy your other assets like Bitcoin. So all of a sudden, because of Forex traders dumping their dollars, what you've actually seen is a dollar index going down, and now you require more dollars to buy Bitcoin. So it wasn't really driven from volume. There was a little bit of FOMO action in there that helped spurred it on a little bit, but volumes are decreasing because it isn't really being, it's not a volume driven pump to the upside, it's a DXY driven pump to the upside. And that's not a sustainable pump either, because the second that those Forex traders say, okay, well, the dollar's now undervalued, I'll go ahead and now come out of my sterling, I'll come out of my euros, I'll come out of my Japanese yen and go back into dollar, and the dollar index will pump up. And when the dollar index pumps up, well, you need less dollars to buy your Bitcoin, and obviously you come reversing all the way back down again. So just be really cautious. Understand what's driving it and what's not driving it, and volume is not driving it. It's a byproduct of FOMO, but it isn't really what is behind the drivers or in the driver's seat driving the Bitcoin price higher. We also have our RSI. It's not overly important on our weekly chart. We can also see that there was bullish divergence right down here at the end of our structure for the FTX kind of pullback. So again, we saw this movement to the upside there. On our daily chart, we do have the bearish divergence though. We can see that right up here in terms of this peak. We're going up into higher highs, but we're losing momentum. Again, it's not volume driven. Okay, so when we see that it's not volume driven, we end up with higher highs in price here because of the DXY. And then, of course, we end up with lower, on the oscillator, on the RSI oscillator, basically indicating the volume is pulling back as price was going up. So again, not looking great there. I estimate that we are going to be pulling back soon. I just don't know when or how long that's going to be. I can't time the market, but it does look incredibly fragile from my standpoint. Now, from the Wyckoff accumulation pattern, again, this actually follows suit of where we are within my way I've drawn this up anyway. Two schematics, but ignore those. It doesn't really matter. We're both in the same area on either of them. We don't know which one of these is going to be playing out until we get down to 18,626. But essentially here we are in this kind of peak up here. Okay, so this peak within phase B, we're looking to pull back down, and we're looking to see if we can test the secondary test of phase A, which will put us right around the area here at 18,626. It's still in play. Not much to really know about it. This is a daily chart, so it takes a long time to kind of play out. So we're looking to see this kind of move back down. But if we do push up at any higher than 25,211, then we are not following a Wyckoff accumulation pattern here, and we can put it to bed. We can draw it in a slightly different area because there's only one other variable or one other way I can draw it, and that is that actually this down here is not a secondary test in phase B, but instead is the selling climax, and we're yet to actually go down into a secondary test of phase B, which will be a very, very interesting thing to see. So we'll keep an eye on that. We'll see how that kind of goes, but for now it is what it is, and I think I will leave the video right there. If you found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, subscribe to stay up to date with everything that we do here, and don't forget to join us down in Discord and keep your finger on the pulse of crypto and never miss a beat. Guys, until the next one, have a fantastic day.